Hey everyone, it's Louisa here, just getting set up for the market analysis for this upcoming week. Hey there, hi Heat Trader, how are you? It's Cold Trader over here. Getting progressively cold. This week moves forward, and at the end of this week, it's going to be like minus 28. Hi Lavere, how are you today? Happy Sunday. I'm gonna give I'm just gonna give everybody, hi Jamie. Hi, good to see you, Jamie. I'm gonna give everyone 1 minute and then we're gonna jump right in. This is gonna be a pretty short call. Number one, the market is very ambiguous. Hi Andre, how you doing from the UK? So I was just saying, guys, that this is gonna be a pretty short call because the market's pretty ambiguous. And so there's not a lot to go on today. Also, tomorrow is the USA banking holiday. So I will not be trading tomorrow. And after you see kind of like what the market looks like today, the market needs like a day or two to figure itself out. So there'll be no trading for me tomorrow, so I won't be going live. So the next time I'll be going live will be Tuesday, Wednesday, Thursday, maybe Friday. We'll just see what opportunities the market provides us with. But let's crack on. I was just saying to Heat Trader that it's getting pretty cold, like it's very cold in Canada. And this week we've got temperatures going down to 20, minus 28, minus 29 degrees. That is, I can tell you, that's like anything over minus 20 or anything colder than minus 20 is pretty darn cold. Okay, so let's just jump into the Forex Factory. We'll take a look at the week. So we are starting Monday, January 19th. You can see here that it's a US banking holiday. So um, nothing really is going to be happening that will be of any interest to me for sure. So there's no trading for me on Monday. So I will not be going live. Next time I'll be going live will be Tuesday at 9 a.m. Now on Tuesday we have no news, so it'll be 9:30 volatility that we'll be looking for. Wednesday, what are these WEF annual meetings? World Economic Forum. They're held in Davos and attended by central bankers, prime ministers, financial ministers, trade ministers, business leaders from over 90 countries. Okay. Most meetings are open to the press, and officials usually talk with reporters throughout the day. Comments from central bankers and influential officials can create significant market volatility. Okay, good to know. So that starts Tuesday. So put that on your radar that that could cause some volatility. Then on Wednesday as well, at starting at 8:30 a.m., we have Trump speaking. So we got some volatility coming in on Tuesday, continuing through Wednesday. Thursday we have core PCE price index, final GDP quarter over quarter. So that's an important number. And then Friday, I'm assuming that on by Thursday, that summit is finished, that financial summit is finished. And then on Friday, we have flash manufacturing. Um, so probably the dates to avoid this week, definitely Monday and then Tuesday and Wednesday. Caution, caution, caution. Probably the first good trading day is going to be Thursday, and then there might be something Friday. So anyway, that's just what I'm looking at here. So let's jump into NQ. And the first thing that really, really strikes me is how much of a, just going to put a box around this area here. We've really been in a, um, let's put purple. Other than the market dropping down on, was it Wednesday? And then climbing back up on Thursday, we've really been in, well, kind of a compressed area really since the lead up to Christmas. You know, we've been like in this since the lead up to Christmas. It's a very compressed price cycle. So, I mean, we've had some good trades, there's no doubt about it, but we just haven't really had consistently really long runs. It's a very compressed. Um, so this is this blue area up here, this blue level is the new area that I added to my charts last week, and that starts at around just over 26,000 down to 25,950, somewhere around there. And the reason I've added this to my chart is because it encompasses a lot of equal highs. And if we pull this through, so this is just, I'm going to keep this on my chart because I think IPTA is repricing. We were rejecting off of this. So that's been quite interesting. Above that, I still have my 4-hour blue level up here. That's going to stay on, and that is looking at the highs, the equal highs here that have touched numerous times. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 11 times. So that continues to stay on. And then this hourly SIBI here has not been touched, and that was created, I think it was around November, yeah, November the 2nd. So that has been untouched. So last week, even with CPI and PPI, the market did not have the energy to come up to this level 26, over 26,000, 26,100. So that was kind of interesting. And then we just had the one day where we came down to sell side, and then this area was the lowest we came. So we're working in a really constricted area. But let's now move to the monthly. And I find the bigger time frames really, really interesting because this is January and it's basically a doji, right? So this is January. We've got a big wick. It tried to make a move up higher into price and failed, came back down, and then we dropped a little bit lower, and then we're in this area here. This body is right inside of another doji, which was December. So December and January, we can see on the monthly time frame that price has been pretty compressed. So that's quite interesting to me. If we take our Fibonacci and we just measure this wick, let's just do quadrants. So our candle from January, we haven't quite come down to the 50th percentile of this wick, but we've been just a little bit shy of it, over the 25%, but just shy of the 50%. So we'll see if price wants to come down to the 50% or not. And then we can obviously see just by eyeballing it that January's wick has come a little more than 50% of December's wick. So here we are with all-time highs up here. So really this is our area above. From here to here is availability. There's lots of liquidity above. But right now on the monthly, it is, you know, in my view on the higher time frame, I want to see more. I need more information because right now price could go bullish or price could go bearish on the monthly. So it is very ambiguous. We need some more information. But let's go down to the weekly. So here is last week, and so price opened up, we went higher, then we dropped all the way down, and we closed here at 26,685. And that is still pretty much inside the previous week's um, candle action or price, if you will, and still pretty similar to the week before. So again, we're operating in a fairly tight range. I still have the order block on my chart. So the order block is this candle right here. And interestingly, that price came down. It tapped in 3 weeks ago and then hasn't touched it since. So, it's showing slightly bullishness, but overall, we are ranging really. Um, I don't have much else here. This wick on this candle from 3 weeks ago, I have as an early sell side. But that's pretty much all I have. And then this could be interesting if price wanted to come up here, and that would be 26,119. So we're kind of operating in this very compressed area. Let's just go to the daily now. So here again, this pink SIBI up here, this is the area that we have not yet been to since December the 2nd, or so, excuse me, November. Yeah, November the 2nd. And you can see on the daily here, this is where the SIBI was created or formed. So candle 1, 2, and 3. And so price has not been back up here. But when we look at the daily, we really get a sense here of how difficult price action has been. Like the wicks and the dojis on either side of these candles. The story behind the candles is that sometimes the sellers take and run with price, and then they kind of reach the highs, and then buyers step in and sell. So it's a really push and pull tug of war. And I recall ICT, and I don't remember which video it was, but I recall him saying that as price gets closer to the all-time highs or areas that price has not been to, that there can be a lot of push and pull between buyers and sellers trying to figure out who's going to take control. And if we look at 1, 2, 3, 4, 5, 6, 7, 8, to even the last 8 days, it has been a push and pull. Ironically, what's interesting in my perspective, and I'd like to hear from you guys, is that on the days that we have a reversal, a smart money reversal, it's been very clear. The smart money reversals have been very, very clear. And I think, Jamie, you took a great reversal on Friday morning. I took the short, you took the long. So as I was getting out of my position, you were getting into your position. But so the smart money reversals have been super, super clear. But we can see that overall, this has been challenging price action, because anyone could make the argument that price is bullish or price is slightly bearish. You could stand on the fence, look both ways, make an argument for both. The only thing that keeps me bullish is this BISI, which was created between candle from Thursday, December 18th, the 19th, and the 20th. So candle 1, 2, 3, we still have this BISI here. And I've been saying for the past couple weeks that so long as price remains above this BISI, or at least at the 50% consequent encroachment, that I'm still bullish. But I want to be clear that I'm waiting for more information. I need the market to present us with some more information, because it's choppy. Even if it is slightly bullish, it's choppy. Now, if price were to get above this level here, which is 26, yeah, just about 26,000. If price can get above here, then I think it might make a run for it. But at this point, it's really not getting above this area, and it's really not dropping below this area. So it could go bullish, it could go bearish, and I just don't know. And until that happens, I'm going to be extremely conservative, especially coming into this week with these financial meetings on Tuesday and then Trump speaking on Wednesday. So I would just save your gunpowder for Thursday and Friday. Just be patient. Don't give your money away. Like, do not give your money away. So let's just drop down again to the 4 hour so that we can summarize now that we've seen the monthly, weekly, and the daily. Um, like I can't believe actually some of the good, really good solid trades, like a short from here, a long from here, a short from here, and then Jamie, I think you took the long from this candle here on Friday. But if you're patient and you wait for those smart money reversals and you really wait for the A plus setups, we're getting some good trades off of that. And I don't see many of us having really, really bad days. So again, we'll just go down to the 1 hour. I just also I want to stress that for me, the most important time frame is I want to know on the weekly. I want to be able to grab the distribute, like most of the distribution for the weekly. That's what I'm looking at, right? So we need to be looking at the monthly and weekly candles to get an idea of where has price been and where's the next area of liquidity, right? So if we even here on the weekly last week, this is opening price. So open, high, low, and close. We're slightly bullish on this, right? Because we closed um, about at midpoint of the previous week, but the high went above the last 3 weeks. So it kind of, it was flirting a little bit up here. So for me, because I like the longer runs and I'm working off the hourly time frames, um, I look at the weekly and the monthly with great interest to say, okay, how is the week? Where's the week going to open up? So I want to see Sunday night. Uh, does Asia make a run for the low? So it'll be low of the week, or does Asia make a run for the high, or is it just trending? Um, or accumulating. So these are the clues that I'm looking for, but I'm going to be very patient this week and I hope that I'll get a good trade Thursday and Friday. But prior to that, and especially with these financial meetings going on, I would be very, very cautious this week. So if you are trading, you either want to decrease in size, you want to keep your positions smaller, maybe stay in a trade less amount of time. Like don't go for the big don't go for the big swings early in the week. It's probably not a good idea. And then maybe just sit patient for Thursday. Anyway, that's kind of my thought. Hi Lynn, thanks for joining us. Any thoughts or comments on that, guys? Anything else that you guys have noticed on the charts or that you're looking at? Anything of interest? I'll just go to the 1 hour here. So just to summarize, if I had to pick a direction, I'm bullish because price is above this daily BISI. If we drop to the 50% of this BISI, then, I'm starting to look for potentially price could come down to this swing low down here, and that would be at 25,264, and then down here into the next hourly BISI at 24,884. Those would be like my next goals for bearishness. Now, always remember that when we have a buy side of the market maker model, which is here, just keep your hourly BISIs on here, right? You don't have to carry them all the way across, but just put them on your chart because when price starts to drop, that's when you're just going to pull these bad boys over, right? It's just like, I don't know, it's just like a lever, you're pulling levers, right? Because these then become the targets. So here we had a lot of price distortion. Here was my next hourly that I just pull across when price starts to come down. So this is how, we're using the BISIs and SIBIs when, this is, so this area here was the buy side of the market. We had a dip and then we continued on the buy side. But, let's see if the sell side manifests or if we just continue up to all-time highs. Anyway, that's all I have. Heat trader, I agree, best to wait and see how things develop. Wait for A++ setups. Yeah. Um, can I just show you the trade that Jamie took on Friday? It was a very, very good trade. And I think it just really highlights that you can have multiple traders see through their eyes things on the chart that other traders don't see, right? And I think that's the beauty of trading, and you need to develop your own style based on what you're able to see. But Jamie, would you mind if I just take everyone through your trade? Because it was a beautiful trade, and it was so funny because I was exiting and you were jumping in, and that's exactly what happens at smart money reversals, right? Buyers are getting out, sellers are stepping in, and we see this price action go up and down, up and down, up and down, wick, wick, wick. And that's what happens when people are buying and selling in the same area. You get this like really fast action. Um, okay, so let's see here, Jamie. If bearish 576.50 is org, close would be the draw. If bullish, December high would be the draw. Yeah, so let's just take a look at if bearish 576. So let's take a look. Whoops. 576, 576. Kind of like, is this what you're talking about, 576 here, Jamie? I was bullish on the day. Yeah, so Jamie, you were bullish. And okay, let's take a look at where you got in and I exited, because I just think that that's like so cool when that happens. And it was the Friday, it was right here. Yeah, it was right here. So this is just like super, super cool. So here we are. Let me just put Friday 9:30 right here. So here's 9:30, and we had Asia high. I can't remember exactly, but anyway, it was something like Asia high or London high here. So I entered the trade somewhere around here, and took it. Let me just put a little circle in somewhere. It was somewhere around here. I got in pretty early. So I saw this as we swept here. So we had purge on liquidity. We had an SMT. We had on the 1 minute time frame, we had a SIBI, a BISI. Price came back into the SIBI and then just dropped. And I was targeting previous day low, which was around here. It never hit previous day low, but this was previous day low. So that was my goal, previous day low. And I didn't know what Jamie was trading. But he shared with me afterwards where he had gotten in, and I just thought that's so cool because I was exiting. And so I exited somewhere. See, I was waiting for price to get to previous day low, so I let price come up to about here before I exited. And then once it got here, I lost, I think, around 50 points off my trade. And so then I thought, okay, you know what? I'm content with enough. I can get out. But Jamie entered on a smart money reversal. And let me go down. Jamie, were you on the 1 minute? Were you on the 1 minute for entry? Let's look at the 1 minute, probably. So we had price come down, come down, come down. here's the low, and then guessing here, Jamie. Let's just see where where did you get in, Jamie? Do you remember what price? So Jamie was bullish on the day. Okay, just tell us what price you got in, or even, yeah, if you just tell us the price, that will be helpful. So this is the low that Jamie would have seen. It's interesting that he felt confident above the previous day high because that would have been a real draw on liquidity. And then I'm guessing, and Jamie will confirm for us, I guess, in a second, is that probably he would have entered, this would have been a busy here. You probably, yeah, okay, don't worry, but we got the gist of it. You probably entered here, but let's look. Hey Taha, I'm I'll help you out on that in a second. The SMT, yeah, no problem. I'll give you a couple of options on that. But so Jamie would have seen, so change in the state of delivery would have been here. So let's change in the state of delivery. And this was another opportunity to get in if you wanted to play it a little bit safe. So here is a BISI. So change in the state of delivery. Let me make this bigger. So change in the state of delivery. We've got a BISI. Where's our SIBI? So our SIBI on the lower time frame, probably on the like 15-second or 30-second, probably would have been like somewhere around here, I'm guessing. I don't have those times, but when I look at this on the minute, I know they're there. So change of this, or sorry, inverted fair value gap. Change in the state of delivery. Here is a beautiful fair value gap, and then entry could have been here. Stop loss, you could put it down here on the inverted fair value gap, or even just below this BISI, because when price is moving high quickly, and you can tell it is because of the size of the candles, price won't generally doesn't want to dip below the BISI here. So you could, if you wanted a really safe, I probably would have put my stop loss here at the swing low. That's probably where I would have put it, somewhere around there. Stop loss. And then for take profit, Jamie, what were you targeting for a take profit? Probably could be this area here, this area here. What were you targeting? Price did not hit my final TP. The market is sketchy. But so let's just say Jamie got in here at the conservative, and you probably got in lower, Jamie, just because Jamie and I trade exactly the same. We've been trained exactly the same. So Jamie probably got in down here, but let's just say hypothetically he got in at the just above the change in the state of delivery. So that would have been 645. I'm just looking at the dollars here, 645. And then let's say we took it above this or right at this green bar here, 645. This is 728. So 728. So 728 minus 645. It's 83 points. It's a pretty good trade. Even like Jamie said, it didn't make it to his target. Your target was probably maybe back up here, Jamie, or at least up here, I would think. I would think to this SIBI here. 88 points. Thank you. And that's not even from probably where Jamie got in down here. That would have been like another 20 points. So this one was 645. If he entered here, that was six. So that's another 45 points. So, potentially 120 points. So Lynn, I took the same trade as you, Louisa, off the 15-minute change in the state of delivery. Very nice. Okay, let's take a look what that looked like on the 15-minute. So let me just take this out. So on the 15-minute, let me just look here. So on the 15-minute, you would have had this SIBI. So this is what we're looking at here. And there was an SMT. So this is the SIBI here. The only thing is, Lynn, is I don't see, like on the 15-minute, I can't see the inverted fair value gap because it was pretty choppy, choppy, choppy. But let's, so Lynn, did you get in here on this SIBI? My target was Asia low. Okay, yeah, that was a great target. Let's just take a look if you were on the 5-minute, because I think the 5-minute is a beautiful time frame to take. So we're looking at the exact same model, right, guys? The smart money reversal. So let's just look at, so Lynn would have got in somewhere around here, so somewhere 798. Lynn, do you remember what price you got in at, just off the top of your head? Let's just say it was around 800. And then you targeted Asia low, and I think Asia low was somewhere down here, right? So that is a great trade, Lynn. That's a really, really good trade. So congratulations. If we look at the same, so I entered off the 1 minute, Lynn entered off the 15-minute to go short. But let's take a look at the 5-minute, because the 5-minute is a beautiful time frame to enter as well. And we had this fair value gap right here. And another entry. This is a beautiful entry here too, right here. This would have been a good entry. And your entry would have been, see this green candle here that wicked into here? There's your entry. This here, the candles were dropping pretty fast. So I got in again because on the 1 minute. But Lynn, if you got in up here, kudos to you. And if you were coming in on the 5-minute, your entry would have been 765. And you probably would have either been targeting Asia low or the previous day low. So if you got in at 765 and let's just say exited down here, 594. So 600, so 700, that's 100 and change. These are all, see how it just works? So you got in at 825, Lynn. So let's just take a look here, 825. Oh, that was a great entry, Lynn. Yeah, 825 up here. Amazing, amazing trade. So all by using the same entry model, you could enter off the 5-minute, the 1-minute, the 15-minute, or you could do what Jamie did. Like maybe he was getting his coffee or something and he missed the short. But as Jamie said, he was bullish on the day. And so he had a framework that he had set up that he believed in based on what he can read in the charts. And he waited for price to hit Asia low. And then he was ready to go long. And, you know, here 80 points to 100 points. So it's kind of cool that we can use the same model, the same basis. You know, there's going to be slight nuances, obviously, but whether, you know, you're in on the short or whether you wait for that short to hit rock bottom and then do a reversal, it doesn't really matter. There's an opportunity everywhere. So that is, you know, congratulations to everybody. And once you can spot the manipulation and you have a purge with nice displacement, that's really the key. And then, you know, having that SMT and the inverted fair value gap those are just, you know, win, 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 win. Lynn, I didn't stay until the Asia low working on patience. Yeah. You know what I do, Lynn, that really has helped me is I move to a higher time frame. So once I'm in my trade and I know that like things are going well and I have this framework of where price wants to go to, I switch time frames. So now if you're entering on the 15, you probably wouldn't want to go up to the 30 minutes. But when I enter on the 1 minute, I don't want to watch my whole trade on the 1 minute because the movement is so fast and it's so quick and it just, I don't know, it makes me tense. So I move to the 5 minute and then I move to the 15 minute and I let the trade play out. And so long as I'm um, taking some profit at levels that I have in my trading plan, then it's just a win-win, right? So okay, so I just wanted to answer that question by Teha. Hello, please. What is the name of the SMT indicator you're using? So let me just do this. So I pay $20 a month for this indicator, for the SMT indicator, and it is by Kronos, Kronos. And if you go into the description of my videos, I have a link to his website. Now, if you don't want to pay 20 bucks a month, which is fine, you can just go into indicators up here and you can search for SMT and you get a free one. So I like Luke's algo. I find his stuff is high quality, and apparently everybody else does too. So if you want to take a screenshot of this, if you want the free one off TradingView, just go to Luke's algo. This one is also good, SMT Divergence by TFO. These are the two. These are the two that I would. And this is Kronos here. It's got a lock on it, and he has three other indicators. Like he has a bundle of four that he charges the $20 a month for. So anyway, these are the SMTs. So I hope that's helpful. Okay, guys. So that's all that I have for today. Like I say, um, Monday is a USA banking holiday, so no market. That's a day to study or do some back testing or like go to the gym or, you know, do anything else. I was looking for Kronos but didn't find the website to subscribe. Okay, so I'm going to make sure it's in the description of this video. Okay, so just wait till after this video and I'll make sure that the link is in there and you just click on it. Okay, no problem. And highly recommend, because I don't know that the free ones on um, TradingView give you everything that Cronus gives you. So he does the yearly, the monthly, the weekly, the daily, all the way down to the 1 minute. And I'm not sure that the SMTs, the free ones on TradingView, have that many time frames. So anyway, highly recommend. Um, okay, any closing thoughts, guys? Anything that you're watching this week? Anything maybe that we didn't cover? Any questions on the smart money reversal? And I just want to also mention that I only use the smart money reversal. Like that is my A plus setup. It's high probability when I wait for all of the confluences to be hit. But um, I guess in partnership with that, I also use continuation. Okay, so I'm not just waiting for reversals, although reversals give me almost everything that I need. But if manipulation happens before the macro, so let's say manipulation happens at 9:35 and the macro doesn't start till 9:45, then inside the macro, we can expect continuation. So if the manipulation, like let's say this manipulation, let me just go to the 1 minute and see what time that was. Hang on a second. Manipulation was at 9:31. So because this is the manipulation, then inside the macro, we can anticipate a continuation. So then and I may choose to enter at 3 minutes before the macro starts. So if the manipulation is a very clear clear manipulation. You can enter the trade 3 minutes before the macro and expect a continuation. Okay, so if the manipulation is, this is a bearish manipulation, right? Because price went high, so we can anticipate price moving lower. So when that time frame window, if you will, opens, the macro, you can anticipate the continuation of moving down. So when I say I only use the smart money reversal, what I mean by that is it's either the smart money reversal or it's a continuation. So I just wanted to clarify that. Okay, guys, so have a wonderful Sunday, and I will be back live streaming Tuesday morning and very conservatively Tuesday and Wednesday with those financial meetings going on. So, okay, everyone, have an amazing Sunday, and I'll see you guys on Tuesday morning for live. Okay, bye for now. Peace out.